Good afternoon, everybody. Then we continue with the schedule. My name is Patrik Bratelius, and I work here at ABG as an equity analyst, and I cover the next company in question, VEF, which is the next company to present. So without further ado, I will now leave the floor over to the CFO of VEF, Henrik Stenlund. Please take it away.
Well, thank you, Patrik, and thank you for organizing this. I think we're short on time, so let's just go straight to the next slide. We'll jump right into it. Perfect. So what I'll do is I'll walk you through who we are, what we do, and touch upon maybe two of the largest portfolio companies, and then we will open up for Q&A. And this is being directed mostly to people that are new to our story, but also a repeat for our current investor base. So what are we? We're a fintech investment company. We're listed on Stockholm, on Nasdaq First North in Stockholm. And we operate in the crossroads of financial services, emerging markets, and technology. That's what we do. We're currently a $500 million NAV company, roughly. We have a very healthy cash position following the direct share issue that we did in August this year. So it's all fresh. We made 17 investments since inception and 2 exits. And inception was back in 2015 for this company. And we are, as I mentioned, emerging market focused. And we have a deep experience and know-how around those type of businesses and markets, which is the material aspect of what we do here. So we have looked at about 600 deals, having sort of brought us a deeper expertise around a variety of different sectors and subsectors within what we call fintech. And we have a global mandate, which means we have a global lens. So we see and can cross-reference opportunities in various markets and learn from those in our investment decisions. So we had an IRR on NAV per share of around 25% since inception, and on the share price around 30%, which is on the up as of late. Next slide, please. Perfect. It's lagging here, but I know what's on the next slide. So our investment thesis and what we actually do. This is how we think about investing in these companies. We are sector agnostic. Having said that, it's fintech that we do. We target any line of financial services, basically, with a technology layer on it. And that can be credit, payments, personal finance, investments, and embedded fintech, as you see on the right side. One subsector that we haven't really invested in yet is in ShoreTech, but it's something we are looking deeply into. In terms of geography, we target scale markets. We like markets with big populations and markets large enough for the companies to succeed within their own borders without having to expand geographically. That is something we look a lot at. Typically, we take minority stakes, 10 to 20%. It could be less and it can be more. But that's sort of our sweet spot. And we are active owners, meaning we have board representation in almost every of our investments, with a few exceptions where we have taken very small stakes, maybe to get a front foot inside the door. And we are rather unique in terms of playing the private fintech space in emerging markets while being a listed investment company. So we're an access vehicle to play this theme for investors. Next slide, please. So this is a snapshot of our geographic distribution. This is our investment portfolio. And as you can see, we have a global mandate, but we target scale markets. So we're in Russia, emerging Europe, the broader emerging Europe, Pakistan, India, broader Africa, Brazil, and Mexico. And from this picture, it's quite clear that Brazil is our core market, and there's a reason for that, which I will get back to later. Second largest market for us is Mexico. So the broader LATAM is roughly 75% of our investment portfolio today. So that's a clear focus. And I guess the runner-up behind those two would be India, where we spend a lot of time as well. So it's a diversified portfolio in terms of sector, stage, and geography, which is something we quite like. Next slide, please. So these are somewhat updated numbers, but as of Q2, we had 15 investments, and we have, during Q2, made one new investment in Pakistan, and post Q2, in Q3, we made another investment in India, our third one, in a tracking platform, which is really a fintech company in disguise, as we see it. It's been a busy half year for us. We've had a lot of activities on the investment side, but also on the corporate action side and ESG. We followed on in one of our portfolio companies, Kontio, which we'll talk a bit about. We invested another $20 million in their $125 million round that they did earlier. And we did a follow-on investment in TransferGo as well. And as you can see from the pie chart on the right-hand side, there are two names in that portfolio that is starting to break out. So we see sort of a portfolio concentration, which is something we welcome, specifically in these two names, because we have very high conviction and we believe that these are future stars. Already in our portfolio, they are stars, but something that will break out and potentially become an even larger part of our total NAV over time, depending on delivery, of course. And worth reiterating, we have a very strong cash position today, so we're ready to support the current portfolio, but also make new investments in this exciting space. Next slide, please. So what we try to do and replicate here is really, it sounds simple. What we try to find the relative winners in each and every market that we operate in. And we have been in and out of the two best fintech assets in Russia and Turkey, through Tinkoff in Turkey and Easygo. Tinkoff in Russia and Turkey and Easygo in Turkey. And we're comfortably in, I would say, the top 3 or 4 names in Brazil with Creditas. That's probably the number 2, and in Mexico as well. And we have made inroads into India with some recent investments there. So we feel very comfortable with those names that we have. And just to give you maybe a reference point at what type of companies we look at, we try to find the Klarnas, the Izettas, the Tinks, the Lendos, to give a comparison, names you may know better than Kontio or Creditas, but operating in these scale markets. So that's our focus. Next slide, please. So just looking at history here and our delivery over time. So it's been a gradual up to the right movement in terms of NAV per share. And we have, like many other portfolio investment companies, been trading at a substantial discount over time. Something we have addressed. We're doing more of this marketing, speaking to investors. And of late, we are trading at a small premium, which is welcome from our perspective, and we think merited given the fast growth rate of the underlying portfolio. Next slide, please. So investing, one can argue, is easy, and it's just spending cash. But the trick here is to, of course, make returns on those investments. And we have a deep respect for the risks involved with this and the markets we're operating, but we have been successful in those 2 exits that we have made year to date. That the first one was Tinkoff, which was our first holding. We had a 65% IRR in that name, which we're very happy about. And the second one was Easygo with almost as good returns, 57% IRR. This is, of course, something we would like to replicate, and we have a very high bar when it comes to investments and exits. But this is sort of two benchmark things that would bring some credibility to what we do, I hope. Next slide, please. Shareholder structure, obviously super important for us. We turn to the capital markets when we need funding, if we don't do exits, and redeploy that cash. And some very, very strong names here. We Rain Cunniff, Libra Fidelity, Swedbank on the Swedish side, and Wellington. Those are all benchmark names. And we have very strong US ownership, as you can see, but also about 14,500 Swedish retail investors, which we're super happy about supporting our story here. But this is a utterly important thing for us to build confidence with our current investor base, to be able to reach out when the time is right to raise more capital for us. Next slide, please. Our team, it's a small but concentrated team, 8 people, as you can see, and we're spread across Ireland, UK, and Sweden. And most of the resources, the 6 that we'll see on the middle and left-hand side, are more or less focused on portfolio and investments, with supporting functions around legal and accounts. So small but very concentrated team, and that's how we like to operate. Quick to decisions, with very active board on our side, and informal communication among the team. Next slide, please. So Brazil. As I mentioned, Brazil has become our sort of holy grail for fintech investments, and the most interesting market globally, we would like to think. And there's a reason for why we have spent a lot of time in Brazil, and have 5 holdings there now. So it ticks a lot of our boxes that we have as criteria when we do invest. And first of all, it's a scale market. It's in excess of 200 million population. It's a big enough market for a company to become very valuable within its own borders, which naturally has a better risk reward profile than if you have to expand geographically. That's our belief. It's one of the most online markets in the world. People are very used to online products. Have a very strong, growing new economy base with ride sharing, e-commerce, et cetera, driving adoption in those markets, and high internet penetration and smartphone penetration, which is an accelerator and a fundamental need for the type of services that our companies distribute. It's one can argue beautiful, but it's an oligopolistic banking sector, which is not uncommon. That's the case in many markets. But in the market where top 5 banks control about 80% of the loans in the system, and they have supernatural revenue economics, some of the highest interest rate spreads in the world, coupled with very, very high fees. And that makes the market ripe for disruption for the type of companies that we invest in and support. To add to that, it's a very well-banked, it's an emerging market with many developed market features, actually. And this is a great thing, because it's not so much a case of educating the masses of the new products and services that we're offering, but in many cases, it's more a question of offering a better, superior, better priced, more user-friendly experience to people who already understand the value of these financial services. Regulatory is, and the regulator in each and every market is key to what we do. Many of the companies we have invested in are operating under various licenses. So having a friendly, enabling regulator in the market is very important, and that is the case in Brazil. It's very clear. And needless to say, about people and ecosystem, we have very strong VC partners that we co-invest with, sharing board seats. but also we've come across very, very strong entrepreneurs and founders in this market. And last but not least, it's a functioning exit market, and we've seen true value creation in the fintech space with the likes of Stone and Pags and XP, etc., etc. Next slide, please. Next slide, please. So we have 5 holdings in Brazil, and that's over 50% of the portfolio. And our largest name, which is also in Brazil, is Creditas. So what is Creditas? Creditas, at the outset, is a secured consumer lending platform. That's the basis and the core for what they do. And Creditas, what they're doing today is that they're building an ecosystem around the 3 core pillars. That's all centered around the collateral. And that can be your home, your car, or your salary. And within those verticals, Creditas is offering a range of different products and services, all centered, as I said, around the collateral. And this is a tremendously fast-growing company from a large base. And one of the few companies that have started to share numbers. That's a function of maturity, and also the fact that they're on a path to IPO in 2022. We'll see what happens with that. It's an election year in Brazil next year, which can turn things upside down, but that's their clear goal and target for next year. So Creditas today runs a lending book of 2 billion reais. That's about $400 million. And they have run rate revenues of close to 600 million reais, which is the equivalent of maybe $110 million in revenues today. Very good unit economics. And as you can see from the customer base, this is not a case of acquiring millions of customers. They have 120,000 active customers generating those revenues. And the beauty here is that, and what Creditas is actually attacking is the very high priced, as I mentioned in the previous slides, unsecured consumer pot of $500 billion, which is overpriced. And instead, people and consumers will use their collateral to borrow against. And just to give you an idea of the evolution of how fast Creditas is moving, is that they started to take the car vertical, for example, started to offer loans using your existing car as collateral. Now you can borrow through Creditas to buy a car, and you can also insure your car, and you can buy and sell your car within this ecosystem. So they're building a very long-term relationship with the customers, which ultimately will, take a larger share of their life around the collateral and increase LTVs over time. So this is obviously one of our favorites, and it's a big part of our NAV. Next slide, please. So as I mentioned, one of the few companies that have started to share numbers officially. So you can see the development of the credit portfolio on the left side and the revenue generation on the right side, on the upper right side. And this is a great trend, of course, and this is a company growing 100% year on year on both the portfolio and the revenue. And we would like to think that will continue for some more time, delivering on that front. Next slide, please. So this is a slide we put together to kind of show the evolution, the activity level at Creditas, how they have been developing over time, both in terms of valuation, when we first invested back in 2017, up until their latest fundraising that they did in December last year, where they raised at the $1.75 billion post-money valuation. Creditas has been very active, both on the organic front, growing their existing customer base, generating more recurring revenue, and thus lowering the CAC over time with the rates of CAC to LTV. But they've also been acquiring a number of companies to complement their respective verticals. As you can see here, BeCredit, one acquisition in the first half of this year, Volts electric vehicles, electric motorcycles, to attack that vertical, which would fit very well in the sort of transportation vertical within Creditas. They recently acquired Minuto Seguros, which is a digital broker, insurance broker, to offer insurance for the cars, etc. And of late, also they acquired Volanti, the used car platform, effectively making Creditas an iBuyer as well of cars. So deepening the respective verticals while growing super fast. Next slide, please. Mexico, our second largest market, also scale market and representing 20% of the portfolio today, where almost everything, we have 2 investments there. Minu is very small, but Kontio is our second largest holding in VEF as well. And Mexico, we're not playing the consumer space. That was logical in Brazil, but in Mexico, we thought that the generally unloved SME space would be a much more interesting and compelling investment thesis for us. And it's a big country with about 7 million SMEs in Mexico, and less than 10% of them have actually access to financing, which is key for the development of the country and for those entities as well. Banks are generally focused on the corporate side, the large blue chip companies, and the rest. And the bottom of the pyramid, maybe the micro SMEs are maybe handled by the microfinance institutes, etc. So the range in between, that's the segment that Kontio is targeting. Next slide, please. So Kontio is a tech company, very tech-driven, like all the companies in our portfolio. And they're building software and digital banking tools to cater to the SME segment in Mexico. Kontio want to be an ecosystem that is everything SME, basically, in terms of financial services, ERP, and payments. Those are the 3 core pillars that they're focused on. This is a company that's maybe 12 to 18 months behind Creditas in terms of development, and again, our second largest holding in the portfolio and a high conviction investment for us. As mentioned, they recently raised $125 million to expand investing in both inorganically and organically growing the business faster. Next slide, please. So this is a slide from their own internal deck, where it is quite clear what they're doing here. They're starting with the unsecured lending to SMEs, but now have added 2 different verticals or two other pillars, and that's SaaS and payments. SaaS is only natural. You gather a lot of data and you provide tools to the SMEs to engage even more with the platform, and that is ERP and accounting software. Think Fortnox as an add-on to their platform. On the payment side, inorganically developed in-house, started B2B payments. But more recently, they communicated this, I think, maybe 2 weeks ago. They made an acquisition of a merchant acquiring company in Mexico called Señor Pago to add to and complement their total offering. So basically moving from a pure SME lender to diversify the revenue streams and offering an entire ecosystem of financial services to this community in Mexico. Their vision is to become a digital bank for the SME segment in the region, and they will do so either by acquiring a license or applying for a license, depending on what's the best and fits the purpose for Kontio over time. Same structure of this slide as for Creditas, and they're basically, I don't want to say following the footsteps of Creditas because they live their own life, obviously, and they have their own strategies. But you can see similar patterns. The value creation in the company where we invested early in 2018. The difference in valuation gradually going up in Q1 of last year, of course. That's when COVID hit. We took a haircut of 25% across the entire portfolio because of low visibility, etc. But since then, they have really started to gain traction again and diversifying the revenue streams again, investing and growing both organically and inorganically. And the last funding raise where we participated took our stake in this company to $75 million. Again, this is not updated. They just acquired Senior Pago as well, which is an important step to their complete offering on the platform, the merchant acquiring space. Next slide, please.
Henrik, unfortunately, I think we have to stop there in order to keep the schedule for the day. I thank you so much for the presentation, and I would love to hear more about you next time we have the Investor Day. Thank you so much.
Thank you.